This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil, and I'm going to give you a stock market update. I'm doing this as of the close on Thursday for Friday morning. What I'd like to do is start out with the market conditions, go through those, and then what I'm gonna use my timeline chart. I want to revisit that, show you how we're situated, and why it's really relevant right now. And then also we're going to go through each one of the time frames using the trend and the momentum conditions, and evaluate those as well. So let's go ahead and get going. I'm going to start out with the conditions, as I said, and get the overall look here. Now, I like to start from the bottom up. I'm a bottom-up technician, so I'm going to start from the bottom here. The sentiment has jumped to 20% more bulls than bears, so that is moving up a little bit. But in this situation, normally I'm looking to see the bulls, 40% right now, get up into the 50s, probably like low to mid 50s. Then we can start looking for some kind of a top to form. So we still have a little bit of room. Now keep in mind, there's a little lag to this. This is done on Wednesday. This is the Investors Intelligence Sentiment number they put out on Wednesday. So they're gathering new data coming in, and then they put it out on Wednesday. So all of what's taking place right now is probably going to have an effect on next week's number, which I would think would get more bullish. All right. Now, I didn't fix this actually. We're at 79%. This should say 79. And I already fixed this though. That is a negative now. So we have one of the conditions for the first time in, really since it's been a while that we've had, actually the trends were negative back in here. And then they went to neutral for a while. But the reality is we haven't had any negatives. We're starting to get up. As we move up here now, we're starting to get this into negative. Now, if this can push up and we get this into the 50s, then I'm putting this in this category as well, and we should be looking for a pullback. Now, here's the key. We're going to move into the trend and the momentum in a minute. But if we see the weekly momentum improve here, then we can live through a pullback here and not necessarily break down. All right. We haven't quite accomplished that feat yet. I'm going to go into the details of that in a second. One other thing I wanted to mention, I brought this up last week. This is very important, and it's still considered to be bullish in both the daily and the weekly. Now, the daily is right at the moving average. I mean, if that pushes up anymore, we can see we've gotten a little bit of a pop in the volatility on the daily chart, but it's not really adverse action, price action. It's strength to the upside. So we'd have to see this really push up and get the moving average to cup around and start rising to turn this indicator negative. If the market keeps moving higher like it's doing, I think this is going to drop back down again. So it's still categorized as bullish or positive. And this weekly is really what's got my interest here, that weekly ATR is below its declining moving average. It's 18 MA. And it really looks like the weekly is putting in a pretty important low. Again, we don't have enough confirmation yet. I'd like to see this moving average roll down a little bit more, but just based on the way I'm anticipating this playing out, it looks to me like this is going to be a full-fledged bullish situation in terms of the volatility on the weekly. So those aren't small things. That's a big deal. Normally, when a market's going to top out, we're going to see an increase in volatility and moves. But this is a little different, what we're seeing here. I mean, this is more of a volatility breakout in a way. So we want to be sure that we're looking for this line, this moving average line, to cup around while this cups up like that. And if we get that, then we should start to see, we should actually be seeing distribution days as opposed to what we've been seeing lately, which is just accumulation bars. Okay, what I want to do is I want to take a quick look at the timeline chart. So I call this timelines because we got all of the, we got a daily 18, weekly 18, monthly 18, quarterly 18, and yearly 18 MA moving average going across, right? We've got the yearly way down here, and we've gotten stretched away. If we go back to where this started, this entire move started back in 2009, 2010, when we started to get everything going was in 2012. And you see how all these lines are close together and we're kicking in gear. This is really where, if you ever get these opportunities here, things are kicking into gear after correcting back to all the major moving averages, all these longer term moving averages, the yearly and the quarterly. We want to take advantage of that in our long-term accounts and for our 401ks and all that stuff. Now, if we push forward, you can see how these lines got really far apart. Instead of them all being close together, we had price up here, 18-month here, quarterly here, yearly. You see how far apart they are? It's so much different than what I was talking about back in 2012. So we've made this move. So I think what's going to happen is these got to compress together again. That could be a time situation. It could be that we push through. So here's where we are right now. We have rallied up to the 18-month line. After bouncing off the quarterly line, getting a push, pulling back, and now making a move. We've finally reached that 18-month. Now it's a question of, can we get through it? I mean, the last time we failed at it, but the difference here is the way this gathered itself. If you notice the way this set up, this just made a big extended run up to the upside and hit this line. What this did was push up, consolidate, and now it's just a fresh breakout again, right? And look at the volume action. Very good volume action. Much better. See the volume action here? This was back in here. So let's clear this off. This volume, which was a volume expansion, was taking place here. But when we reached the 18-month, there was nothing there. There was no volume. This is different. Look at the volume expansion as we're breaking out here. This is a much stronger condition in place. So we just got to, look, you have to take each new day into account. Right now, I'm under the impression that we're going to probably get through this 18-month line. But we have to react and see how this plays out now that we've reached it. The reason why I'm thinking we probably get through is the momentum conditions are still pretty good. We had these oversold FANG stocks that just got way overdone late last year, and they're rip-roaring to the upside, and they play a huge part in the S&P and what it's going to do. It doesn't mean that they're going to lead going forward, but it does really help the price action of the index for now. And some of those still have some pretty good momentum right now. So let's go ahead and get through the individual time frames. So again, we can start here. The monthly chart, we have now finally reached the 18-month. All right, we've been talking about this. Now, as I mentioned, the MACD had worked its way back down closer to zero, and we never saw the sellers get above 25. The red DI never got above 25 through this decline phase. So you have to really consider, neither one are in charge right now, but you have to really look at this last peak and say, okay, we never got counteracting action on the sell side, at least not so far. Now, it's still pretty neutral here, and I would call this basically neutral, but it's a lot better than it was up here. This was pretty negative, and as it broke down from an extended level and broke the signal line, we knew we had some risk in place. But now we've found support at the 40-month. We're trying to get through the 18-month, but we're right at it right now. Here's where it starts to get a little bit more interesting. We've done an ABC now because we made a higher high. You see how this moved up, pulled back, boom. So this is A, this move here, this is B, this is C. All right, now, is this the start of a new strong phase to the upside? Well, this is going to tell us a lot. If you notice the green DI, in fact, let me zero in on this so we can look at this for a second. Green DI has finally started to move. It's actually above 25, just barely, but it is taking out the red DI, all right? Now, that's not a small deal because red has been in charge since way back here. Red has been above green. Do you see that? This is the first time it's crossing since December of 21, all right? Now, we have that. We have MACD, the line itself crossing the zero line, but the signal is still below the zero line. So we still have the potential for a zero line reversal. with low ADX. All right, we do have that potential. Now, the reason why I'm not giving that as much credence as I might have last week, which I definitely want to give it credence, I'm going to keep an eye out. Look at what's taking place in the smaller time frame momentum. First of all, the hourly is showing really good strength and follow through. This every time you make a peak above 25 to 30, something like that, you should expect continuation. All right, so we had a move to the upside based on the buyers. We consolidate. We make a move to the upside based on the buyers. We consolidate. We make a move. It's getting stronger, right? And so we should consolidate here, but probably push higher one more time, at least one more time. And notice what's happening. We're getting the ADX line. It's moving up ever so close to the 25 line. It's not quite there yet, but notice what's going on with DI. Green DI is still making higher highs here. And we did make a new lower low in the red DI. Let's just zero in on this here so you can really see. Red DI made a new low relative to these past bottoms. So the sellers have weakened. And also, it's not a small thing that the volume action keeps improving. We're taking out this high. So we've gotten through 4,100. But we have to deal with the 18-month. And we have to see this ADX line show a little bit more follow through. But based on what the DI lines are doing, I get the impression that over the next few days, we're going to see that ADX crossing above 25. So it's still important. We still see a reaction at the 18-month. Can we blow through that or not? But the underlying universe, and I've been bringing this up, and I obviously talk about this with my subscribers, is that the underlying universe continues to improve and expand. We're seeing more stocks shift their trends positive. They're uptrend. They're going from downtrends to neutral to uptrends. And I'm seeing more and more uptrends every week. So as long as that remains the case, I think you have to keep giving this credit. And we just have to stay on our toes in case something adverse happens relative to the economy where the Fed might have a shift. But based on what Jay Powell said, a day or two ago, the market really liked what they heard. The reaction is a lot more important than what he said. Can't even tell you what he said, but what I know is the market really liked it. So we want to watch the reaction to the news as opposed to the news itself. That's the update for the week. Go ahead and post any questions or comments. Thanks.